The Nightly Business Report.
Good evening. Tonight, the first half of 2025 power rates will not change, according to the Power and Energy Ministry, which cited financial management measures put in place to make up for the expected shortfall. During a meeting at the Presidential Secretariat yesterday, President Kumar Dissanayake instructed the Ministry of Finance to increase the effectiveness and resilience of Sri Lanka's financial system. The market showed encouraging momentum on the week's last trading day, with the S&P SL20 and ASPI both holding on to their gains. As the indices continued to rise, the upward trend demonstrated investor confidence. And Wall Street retreated as investors assessed economic data ahead of the Fed meeting. Producer prices rose more than expected in November, but lower service costs signaled disinflation.
From Studio 24, here's Anuradhi Vikramasinghe.
Good evening and thank you for joining us. The Power and Energy Ministry has confirmed that electricity tariffs will remain unchanged for the first half of 2025, citing financial management measures implemented to offset anticipated shortfalls. This decision aims to provide stability amidst ongoing energy challenges.
At a media briefing organized by the Government Information Department, Power Sector Reform Secretariat Director General Engineer Pubuduni Roshan confirmed that electricity tariffs will remain unchanged for the first half of next year. He highlighted that maintaining the existing tariff structure would lead to a revenue shortfall of 39 billion rupees for the Ceylon Electricity Board. The projected cost of electricity for the first half of next year is 268 billion rupees, while existing tariffs are expected to generate only 229 billion rupees. To address this gap, the CEB will use profits from the year's earnings. Engineer Niroshan assured that there will be no increase or decrease in tariffs during the first 6 months of next year. Despite reports of significant profits by the CEB last year, he clarified that about 112 billion rupees of additional revenue was allocated to settle pre-existing loans. For 2024, the CEB anticipates 41 billion rupees in additional income, which will help cover the projected deficits for early next year.
President Kumar Dissanayake has directed the Ministry of Finance to improve Sri Lanka's financial system's efficiency and resilience during a discussion at the Presidential Secretariat yesterday.
President Dissanayake emphasized the central bank's vital role as an independent institution and assured the government's full support in stabilizing the country's finances. He stressed the need for an effective mechanism on streamlined banking and financial operations, ensuring efficiency and accessibility. The discussion also highlighted the central bank's commitment to closely analyzing economic and financial system developments. The focus was on implementing policies to ensure final stability and enhance system resilience. Further talks centered on enforcing macro-prudential policies with the financial sector. As the economy stabilizes, the focus has shifted to fostering safe growth, prudent risk management, and capital building. The government is dedicated to fostering long-term sustainability and a robust financial system. Key participants included the government ministers, senior officials, and the governor of the central bank.
The United Arab Emirates has pledged support to Sri Lanka's efforts to become a developed nation. During a high-level meeting at the Presidential Secretariat yesterday, UAE Ambassador to Sri Lanka, His Excellency Khalid Nasser Al Ameri, assured President Kumar Dissanayake of the UAE's commitment to strengthening bilateral relations. The ambassador emphasized plans to increase investments in Sri Lanka and share technical expertise in digitization and modern technology. Discussions also highlighted the significant role of 150,000 Sri Lankans working in the UAE, with both sides exploring opportunities to expand employment. The UAE, Sri Lanka's sixth largest export market, was identified as a key area for boosting trade. Ambassador Al Ameri reaffirmed the UAE's commitment to long-term friendship for support for Sri Lanka. The 31st Facets Gem and Jewellery Show, organized by the Sri Lanka Gem and Jewellery Association in partnership with the National Gem and Jewellery Authority, will take place from the 4th to the 6th of January next year at the Cinnamon Grand Hotel in Colombo.
Facets 2025 kicking off the new year has become a highly anticipated event in the gemstone and jewellery industry. It will bring together prominent traders, manufacturers, lapidaries and collectors from around the world. Over the years, Facets has celebrated Sri Lanka's rich history as a leading source of over 75 varieties of coloured gemstones. The show aims to highlight local jewellers and traders, showcasing Sri Lankan craftsmanship with a blend of tradition and modernity. Entrepreneurs from key industry hubs like Ratnapura, Elahara and Colombo will display the country's stunning gems and jewellery. Facets also serves as a platform for industry leaders to collaborate and work towards a goal of achieving $1 billion in exports. As the exhibition enters its 31st year, it promises to offer an immersive and insightful experience for visitors. The event is set to attract global attention, celebrating the beauty and unmatched quality of Sri Lanka's gems.
High Commissioner of Sri Lanka to Bangladesh Dharmapala Virakodi met with Vice Chairman and CEO of the Export Promotion Bureau of Bangladesh, Anwar Hussain, to discuss enhancing bilateral trade ties. Virakodi highlighted the untapped potential between Bangladesh and Sri Lanka, emphasizing the strong trade relationship. He noted that Sri Lanka's apparel and textile industry is a major contributor to the country's exports, accounting for 32% of total earnings in 2023. The High Commissioner also mentioned that leading Sri Lankan garment companies such as MAS, Brandix, Hirdharmani and Univogue are operating in Bangladesh. Furthermore, he pointed out opportunities for Bangladesh textile companies to invest in Sri Lanka's textile zone in Eravur. The discussion underscored the importance of strengthening economic ties and expanding investment opportunities between the two nations. Let's take a short break now. This is the Nightly Business Report. Welcome back to the Nightly Business Report. The market showed encouraging momentum on the week's last trading day, with the S&P SL 20 and ASPI both holding on to their gains. As the indices continued to rise, the upward trend demonstrated investor confidence. For further insights, we speak with Ranjan Ranatunga from First Capital Holdings.
The Colombo's continued its strong bullish momentum today and recorded a robust participation, and with both retail and high net worth investors taking positions during the day. Almost every sector experienced price gains, with investor sentiment particularly focused on banking, food and beverage and tobacco sectors, while selected construction sectors also enticed added interest. Accordingly, the index gained by 170 points during the day to close the day at 14,205, soaring and recording an all-time high. Amidst multiple off-board transactions and increased participation from retail as well as high net worth investors, turnover stood at 6.1 billion, recording a 40% increase from the monthly daily average. Moreover, capital goods sector led the daily turnover with a contribution of 21%, followed by the banking sector and food and beverage sector, which contributed 30% to total turnover. Meanwhile, foreign investors remain net buyers with the inflow of 126 million rupees for the day. Meanwhile, industrial assaults, UB Finance, Abans Finance and PMF Finance were the top gainers for the day, while SMB Finance, Bense Royal Resorts, Beruala Resorts, City Land and Developments and Ceylon Beverage Holdings were the top losers for the day. Thank you.
The market had a great start this week, as evidenced by the S&P SL 20 and ASPI both holding on to their gains throughout the week. And for the first time in history, the ASPI surpassed 14,000 points. For further insights on this, we speak with Dimantha Matthews from First Capital Holdings.
Thank you. The market has been extremely bullish this week, with the index rising by over 800 points, with the investor sentiment being very strong. So we have seen very high turnover levels. On most days we have seen 5 billion plus turnovers, and the turnover has been getting stronger and stronger with the high net worth, institutional and also retail participation taking place. So we are also seeing a gradual improvement on the foreign front, where we've seen over the last couple of days a lot of net foreign inflow coming into the picture, with most investors concentrating on the blue chip counters. So overall, on expectation of the completion of the external debt restructuring, we've had significant investor interest coming into the banking sector counters, as we've seen banking sector shares rising very strongly across the board. In addition to that, we've seen buying interest coming into a lot of blue chip counters, including John Keel's and also some of the diversified sector counters such as Haley's, and also more investors moving into other sectors such as diversified financials, export sector, and also most importantly the consumer sector as well.
Gold prices edged higher today, poised for a weekly gain, fueled by reports of China, the world's top gold consumer, resuming its gold purchases. Spot gold rose by 0.1%, reaching $2,684.87 per ounce, and is on track for a nearly 2% weekly gain. The increase in gold prices comes amid heightened expectations that the U.S. Federal Reserve will reduce interest rates at its upcoming meeting on the 17th to 18th of December. U.S. gold futures slightly declined to $2,706.40. The recent positive momentum in the gold market reflects a combination of strong demand from China and investor anticipation of a shift in U.S. monetary policy. Gold's steady rise continues to capture attention as investors look for safe haven assets. Oil prices nudged upwards today, heading for their first weekly gain since late November, driven by growing concerns over supply disruptions due to additional sanctions on Iran and Russia. Brent crude futures rose by 5 cents to $73.46 a barrel, while U.S. West Texas Intermediate crude gained 8 cents to $70.01 a barrel. Both contracts are poised for a weekly rise of over 3%, supported by fears of tighter sanctions impacting Russian and Iranian oil supplies. Additionally, hopes that Chinese stimulus measures could boost demand in the world's second largest oil consumer help to underpin prices. The combination of supply concerns and demand optimism has provided a lift to the oil market this week. The Sri Lankan rupee appreciated slightly against the US dollar today compared to yesterday. According to the Central Bank of Sri Lanka, both the buying and selling rates of the US dollar have decreased. Let's now take a look at how the Sri Lankan rupee is performing against other global currencies. A short break now. This is the Nightly Business Report. Welcome back. The super luxury passenger vessel MV Ida Stella of Ida Cruises, carrying 2,139 passengers and 640 crew members, made her maiden call at the Port of Colombo.
To celebrate the maiden call of MV Ida Stella at the Port of Colombo, plaque exchanges were held between the vessel's master, Sri Lanka Ports Authority, and local agents Aitken Spence Shipping Limited. SLPA Chairman Admiral Sirimevan Ranasinghe expressed his honour at the vessel's presence in Colombo. Ida Stella, a German cruise liner, is approximately 253 metres long and 38 metres wide, with 1,097 staterooms and a capacity to accommodate 2,700 passengers. The ship embarked on its journey from South Africa, visiting Port Elizabeth, Durban, Mauritius, Seychelles, Oman, UAE and the Maldives before arriving in Sri Lanka. The vessel, cruising under the Italian flag, is headed next for Kuala Lumpur, Malaysia, after departing from Malé, Maldives. Aitken Spence Shipping Limited continues to offer integrated services to cruise operators, contributing to the growth of Sri Lanka's tourism industry. The company, part of Aitken Spence plc, has expanded its role in port efficiency and investment-driven operations.
Priyan Edirisinghe has been appointed as a non-executive independent director to the board of Cargill Ceylon plc. A chartered accountant with over 20 years of experience, Edirisinghe is currently the managing partner at Baker Tilly Edirisinghe & Co., one of Sri Lanka's top audit, tax and consulting firms. He is a fellow member of the Institute of Chartered Accountants of Sri Lanka and holds an MBA from the University of Southern Queensland. Edirisinghe also serves as an independent non-executive director of CT Holdings plc and CT Land Development plc, where he chairs the Audit and Related Party Transactions Review Committees. Additionally, he is a non-executive director of Dialogue Finance plc and chairs its Audit and Related Party Transactions Review Committees. His extensive experience in finance and governance adds significant value to Cargill Ceylon plc. The British Council launched its youth-led green and inclusive businesses project in collaboration with 4 state universities: Peradeniya, Kalaniya, Sri Jayawardhanapura and Uvalasa.
The British Council launched its youth-led green and inclusive business project to equip university students with these skills to drive sustainable change in their workplaces and enterprises. The initiative aims to foster environmentally conscious business practices and empower students to become leaders in sustainability and social inclusion. During the event, British Council Country Director Orlando Edwards highlighted the organisation's commitment in supporting Sri Lanka's youth as a catalyst for innovation. He emphasised that today's youth are already making significant impacts, driving change in areas like sustainability and inclusivity. Shamindri Saparamadu, Director General of the Sustainable Development Council of Sri Lanka, also spoke at the event, noting that youth have the potential to offer innovative solutions to develop challenges. She commended the British Council's efforts in equipping future business leaders with skills that go beyond profit to create value through green and inclusive businesses. Saparamadu also stressed the importance of aligning such programs with Sri Lanka's broader sustainable development goals.
Dr. Ravi A. Fernando has been appointed as an independent non-executive director to the board of LPTA Plantations plc. Fernando is an alumnus of the University of Cambridge, holding a postgraduate certificate in sustainable business and a Master of Studies in Sustainability Leadership. He also earned an MBA from the University of Colombo and a doctorate in business administration from the European Business School. Fernando has extensive experience with multinationals such as Unilever, Beckinser and SmithKline Beckham, spanning Africa, the Middle East and Asia. He was the first CEO of the Sri Lanka Institute of Nanotechnology and later served as the operations director of the Malaysia Blue Ocean Strategy Institute. In addition to his corporate roles, he is a published author and a member of the Board of Study at the Postgraduate Institute of Management. Ceylon Bank has partnered with the Sabaragamuwa Province Entrepreneur of the Year 2024 as the official banking partner for the event.
Ceylon Bank has partnered with the Sabaragamuwa Province Entrepreneur of the Year 2024 as the official banking partner for the prestigious event scheduled for December 18, 2024. The award ceremony is considered the highest provincial honour for the business community, celebrating the region's top entrepreneurs. It recognises contributions across various business sectors including manufacturing, services, trading and agriculture, with special awards for Woman Entrepreneur of the Year, Differently Abled Entrepreneur of the Year and Young Entrepreneur of the Year. Event also highlights achievements in sectors like gem and jewellery, tea manufacturing, tourism and innovation. Ceylon Bank's sponsorship emphasises its commitment to supporting and empowering small and medium enterprises in the Sabaragamuwa province. By providing access to banking solutions, the bank aims to help local businesses thrive and grow. The event is widely regarded for its credible judging process involving professionals from both the state and private sectors.
Let's take a short commercial break now. Global business updates coming on the other side. This is the Nightly Business Report. Welcome back to the Nightly Business Report. Asian stocks fell sharply today, tracking losses on Wall Street overnight as Chinese shares slumped following disappointing policy updates from a high-profile legislative meeting. The Shanghai Composite Index dropped 1.8%, while the Shanghai Shenzhen CSI 300 Index saw a 2% decline. Hong Kong's Hang Seng Index also fell by 1.9%, underperforming its regional counterparts. Japan's Nikkei 225 slid 1.3%, and the Topix Index dropped 1.4%, with investors awaiting next week's Bank of Japan policy meeting. In Australia, the S&P ASX 200 lost 0.7%, while Indonesia's Jakarta Stock Exchange Composite Index saw a slight drop of 0.3%. Wall Street retreated as investors assessed economic data ahead of the Fed meeting. Producer prices rose more than expected in November, but lower service costs signaled disinflation. Jobless claims unexpectedly increased.
U.S. stocks closed lower on Thursday as investors evaluated key economic indicators ahead of the Federal Reserve's policy meeting next week. The Dow and S&P 500 each lost more than 0.5%, and the Nasdaq shed more than 0.6% to dip back below 20,000, a milestone it crossed a day earlier. A Labor Department report showed U.S. producer prices rose more than expected in November. While markets are still pricing in a quarter-point rate cut from the central bank next week, stocks on the move Thursday included Adobe, which plunged nearly 14% after the Photoshop maker forecast fiscal 2025 revenue below Wall Street expectations. Shares of Warner Bros. Discovery soared more than 15% after the media company announced plans to separate its declining cable TV business from streaming and studio operations. And Nordson slid more than 8% as the dispensing equipment maker forecast fiscal 2025 revenue below Wall Street estimates.
Japanese big manufacturers' sentiment improved slightly in the 3 months to December. A quarterly survey shows this, boding well for the central bank's plans to gradually raise interest rates from near zero levels.
Corporate Japan is feeling a little more festive ahead of the holiday season. On Friday, the quarterly Tankan survey rose to plus 14. That's the highest figure for the closely watched gauge of business sentiment since early 2022. Bank of Japan Governor Kazuo Ueda will be punching in the figures as he weighs his next decision on rates. The central bank is due to hold a policy meeting next week, and the Tankan numbers bode well for its plan to gradually lift rates from the current level of just 0.25%. They say policymakers want to see more evidence that wages are rising before making a decision. Around half of economists do forecast a hike in December, but markets price in a less than 30% probability. There's another X factor in the equation too, and it's called Donald Trump. Economists say the overseas outlook is uncertain ahead of his second administration. Japan's big automakers in particular could be at risk from his promise of sweeping tariffs. The Bank of Japan will be keeping an eye on the US Federal Reserve as well, with a rate decision there coming just hours before its own. The Fed is widely expected to cut rates, but could trigger a surge for the dollar if it decides to hold steady. That would increase pressure on the BOJ to increase its rates to counter any further slide in the already very weak Japanese yen.
Well, that's all from us here at the Nightly Business Report for tonight. We'll see you again on Monday with the latest updates across the business globe. Until then, I'm Anuradhi Vikramasinghe. Thank you very much for watching. Have a great weekend.